My name is Kate Guillen. I'm the founder of Simplicity Ops. And for those of you who I've not met before, we partner with client focused advisory firms to help grow and scale their practice by leveraging technology to deliver a consistent and exceptional customer service experience. Our work is tailored exclusively to Redtail and Wealthbox users. But that's kind of us in a nutshell. We love what we do. We have a good time. We love partnering with teams like Brett's. I'll let Brett introduce himself, but I'll start by saying I've known Brett for numerous years. I think we met back in what, 2018, 17?
I think it was fall of 2019. It was definitely
2019.
before COVID.
And Brett and I got to work together. I was working at an RIA. Brett was handling our trading, and we got to be friends. And Brett was one of the inspirations behind starting Simplicity Ops. So it's kind of cool to still be friends, still keep in touch, and get to do awesome events like this. Kind of a fun full circle moment. So thank you, Brett, for joining us today. Without further ado, I will turn it over to you.
Yeah, appreciate it, Kate. Thanks a lot. I know. And back then Zoom was not really a thing. So lo and behold, this is the first time that we've actually seen each other face to face. But it's great to see your growth. It's great to see you help so many people over the years. I just remember back then seeing your work in Redtail and just being in awe and shock about how good it was. And I thought, you've just got to take this to other people. It's too good just to keep in one area. So I was glad to see you
Thank you.
doing so well. And hello, everybody. I guess this is fun because all I see is names. I'll just be talking to you, right, Kate? Yeah. Brett Wheeler, founder and owner of Advisor Logistics. We've been in operation since 2018. The gist of what we do, outsource trading. You build your models, your portfolios your way, and then we come on with firms and basically bring those portfolios to life, trading for the accounts and households that we advisors give us to manage. So it's all on the back end. I think one of the main things back in 2018 when we started, it wasn't a thing that existed, but it's kind of the space has evolved over time. But I think one of the big things with us is we're very trader led, supported by technology. And I think a lot of firms out there that are pushing kind of that they do outsource trading is really a tech led idea that then they might have some people in the background. So it becomes very robotic in nature. But I think Kate can attest, and we actually have a couple of firms that we work with here that we're very personal in the way that we operate with firms. I'll do a brief history of us, kind of how we got started, our evolution. The title of the presentation is a framework for growth. We see a lot of firms out there. We've encountered a lot in our time, and we've been working with, we see firms that have gone from $30 million when they started working with us that are now $300 million. I've seen firms at 200 million that have pushed over a billion. We had a firm that started with us 2 years ago. They were 150 million and they just touched a billion. 7 million to 250 million. Some here, 150 million to 600 million. So we've seen around the country in various regions, and I think there's really key things that I think I was never really good at growing an RIA, so I don't know how the growth occurs, but I can see the way that these businesses operate. And I thought I might share some of that perspective, and then the perspective of what we think they do well, and how we support that, where trading and portfolio administration can be shored up to provide an infrastructure that allows that growth. I mean, again, we've started with these firms at very small, and we gave them that framework that they could grow into rather seamlessly. So I think that's kind of the idea of what we're going for today. So I started in the industry in 2007. The fall of 2007, I was an advisor coming right out of college. So there's a very interesting time to get started. The financial collapse happened immediately at the start of my career. I made it. I made it through, and then I was an individual advisor for a period of time. that morphed. I started making connections with other advisors. In 2012, I started an RIA. I left the broker dealer and the group that I was with and went out on my own. As soon as I started that RIA, I started making connections with other advisors, and I got more into money management. I wanted to provide models for advisors and things like that. And that more so morphed into I rebranded the firm that I had and started bringing some advisors in. Um, I've done everything under the sun in an RIA, operations, compliance, all of it, advisor, sales, CRM management. I mean, the whole gambit of everything. And in that firm, as advisors started coming in and growing, my role shifted more towards portfolio creator, chief investment officer, and also I oversaw all of the trading and ran all of the trading. And in time, I mean, we were growing good. I think we were about 150 million. The advisors were doing great. I was noticing a lot of continuity issues. I always give the example, when my son was born, my wife had to be in bed rest in the hospital for about 6 weeks. And so I'd be at the hospital, and then I'd go to the office, and I would do the trades needed for the day, and then I'd go feed the dogs, and then I'd come back to the hospital. And that was life for 6 weeks, but it really exposed some issues, which was a total lack of continuity. And I started exploring, an outlet for that. And so again, this was kind of 2016, 2017 timeframe. I started exploring an outlet, and I didn't want to take our portfolios and hire a TAMP or a model provider to do it, because they would be, 60 or what, 30, 40 basis points at the time. Really, they wanted to charge for the intellectual property of the portfolio design. And I felt like we could do that ourselves I mean, it's got some challenges to it, but it doesn't warrant outsourcing at a 30 or 40 basis point clip. So what I wanted to do is I wanted to find somebody that could take our models, our portfolios, that understand the intricacies of our clients, legacy positions. This client likes to keep this thing in here, or specific ways of trading households, capital gains budgets, and all of these nuances, and to trade our models in that way. And I simply couldn't find it. It didn't exist. And so that kind of led me on about a year long rabbit trail of looking down. And eventually I went to the advisors of the firm and the partners there and said, "Hey, I want to start this thing. I think it's a good idea. I think it can have some traction." And so we planned an exit. I got out of that to start Advisor Logistics in 2018. They were gracious. They became our first client at the time, and they still are with us today. So we've been trading for them for 8 years. So started in 150 million. Over that time, I think we've hit a nice little solution. We've solved the problem. Currently today, we're managing about $7 billion in assets. We have about $3 billion in households that we manage and trade on. I have 6 traders full time. They're throughout the country. So I've got one in Austin, New Jersey. I've got a trader that's 3 blocks from Wrigley Field. Some in the Northwest, so we're all over the place. So we kind of have that geo redundancy that's really nice. I know a few years ago, Texas froze out. Big storm here, ice. I mean, all of our electricity went down for basically a whole week, and I couldn't do anything. Well, Chicago is certainly adept at keeping up with snowstorms, so they were fine, and they were mobilized and moving. So that redundancy was really nice. So anyways, that's kind of, our journey to get to this point. We've really enjoyed it and enjoyed working with RIAs. It's all I've known in my career, pretty much. So
What a cool story. It resonates so much, and I appreciate you sharing that. But I'm curious, because of your experience and the depth at which you've been able to, integrate yourself into some of these practices. Where do you typically see the breakdown as firms experience that level of growth? I'm curious if it's like a people issue, a technology issue, a systems issue, or like some sort of combination of it all.
Yeah, I think it's probably it is a combination of it all. And I think, from my perspective, it kind of happened. They start growing before they're established and prepared to do it. And so a lot of times we come in to help a firm, and not to say that things are chaotic, but they just are not formalized, right? Stuff lives in the advisor's head. The advisor knows that this client's cash, I can't invest it. But a lot of these systems and processes are not really formalized. And there's also a lot of things that the advisor wants to do or would do in a certain way, but because of limitations of a variety of factors, they do it a completely different way. So, for example, when we trade, well, I mean, we're there every day. We trade every day. We monitor cash every day. We monitor transactions every day. Um, but we might come to a firm that they're only able to invest new deposits in every other week because of their limitations with staff or their limitations with processes and whatnot. So a lot of times when we come in with firms, I think one of the main things that we say is, look, who do you not who are you today with the way that you're running the trade operation, but what would you like it to be? What do you want it to be? And those firms that have started with us early, we were able to establish that early and establish a lot of these things right out of the gate with them and help them formalize. And those formalizations, I think, is what allows them to take on that growth where they're not worrying about that system in the background. All they're worried about is hustling and maintaining client relationships. So I think that was one of the big things. And a lot of these things are, I mean, there's a big web of things that may not be thought about, capital gains budgets, and then the particulars of model designs. And, we see a lot of times where advisors will design models for a client, but then when they get to a nuance or somebody with an intricacy to it, that they will design a completely separate model for it. And then it becomes disconnected and hard to manage when you want to do big giant trades or make changes. You just really can't pivot that fast. So, figure out what you want to be. Um, what would be your preference of how you want things to be done, and then formalize a variety of factors. Everything that we do is geared towards being able to do, it's not to be able to execute trades on a daily basis fast or efficiently. It's that when the time comes that I have to do something large, I have to do a model change, variance is triggered. I need to do capital gains budgets. If you're running these processes and systems yourself now, you probably encounter things like, hey, we really wanted to do a model change, but now I'm working to ensure, all of our cash holds are tight and all of these things are proper so that I can actually do this rebalance. If you're fortunate in using a sophisticated software, is good. A lot of times we encounter clients that are still possibly using Excel. Maybe they're just using iRebal or a really simple system that's not allowing them to uh, really pivot and do the things that they want to do quickly. I think one of the things here listed on the slide is we set up in such a way that we make the simple or we make the complex simple in management. So we're very adept at, I mean, we'll build models out, we'll build constructions, and then we have, a lot of things that the advisors might want to add. The capital gains constraints, don't sell this position, don't take this down below this, et cetera. Well, we're still able to manage it with a simple model structure and some simple streamlined cash structures. But because of the way that our systems work and we trade, we're able to still trade fast and efficient with a simple model structure, but account for all of the complexities. I know that's a little kind of pie in the sky type stuff, but it really is all in the setup. And we've just, because we work with firms all over the place that all have their own way of wanting things done, we've learned how to do all of that very, very efficiently. And I think on the next slide, I'll get to what some of those things may be. Also think redundancy is extremely important. Um, I just I remember I had my daughter on a Thursday, and then I was back and doing trade. I had to do trades the next day on a Friday. And the reason is because, well, we could train somebody to do a basic cash raise or something like this, but that's not. I mean, that doesn't work. That ends. And for the advisor, if you don't have the full gambit of everything covered and somebody that can do it in redundancy, then really you can't truly have a break. And other things, you might be in a meeting with a client, and a request comes in from an urgent request comes in, and you're on the desk over there, and somebody's got to be managing that process but you can't get out of a meeting. And so those redundancies are I think really critical. And it's hard. It's hard for growing firms because you hit this point where you don't know if you get a full-time trader, because you may not need it for that position. Because really, in all honesty, it takes a few hours a day to trade, and that's kind of it. But it's those emergency situations. Something popped up at 2 o'clock and needs to get done. And yeah, so that trader that you had is now in the in the meeting with you, meeting with a client, and they're not there and available for the trading. So, but really, the firms that have done really well from the start, they've established how it is that they want things to be. They've gone through the formalization process of, here's broadly our capital gains budgets that are going to affect all accounts unless we've changed it. We want to hold this amount of money in cash for systematic distributions. We want every 3 months, we want to raise the 3 months of cash. At the end of when it gets down to below a month, we want to replenish. We want high cash to be at this parameter. We want low cash to be at this parameter. All these different protocols and checks, those become solidified, and then everything is accounted for as time goes along. And then setting up, I mean, you really do need pretty robust systems if you want to set things up to handle complex situations with a simple setup. And a lot of the technologies just don't support it. So some of them do. So if you get into householding, I mean, a lot of firms might not want to do householding just because of the challenges that it may have, and they may not be working a software that's sophisticated enough to do householding, asset location, in various tax loss harvesting strategies and optimizations that may come along with it. So, I mean, it's a lot to run a system, I think, that is able to absorb growth, and a lot of infrastructure and thought that goes into it. But it certainly is worth it to establish what you want to be out of the gate, so that once you start handling the growth, all of that stuff is accounted for.
This is so nicely laid out. I guess the one question is, I understand the concept of like having the vision, formalizing it, keeping it simple, having, redundancy so you don't have a single point of failure. But like, how do you actually do that? And maybe that's on your next slide, but like, what system are you actually using to document this so that you have a centralized place to manage this, to be able to delegate to somebody like you? Oh, there you go.
Yeah. So, well, I think the very first thing, and again, I said it earlier, we like to operate within what do we have to do every single day to make sure that when accounts have breached variance, that I can go through just a few small steps and trade broadly across all accounts, within, an hour window. If I need to be able to turn over $150 million in a day, well, everything has to be very, very tight up until that timeline. That means all of your do not sells have got to be in place and on a daily basis. And I mean, here's just one of the unique ways that we do it, and I think everybody should do it this way, is we are a very transaction oriented cash manager. We're not a variance oriented cash manager. So what I mean by that is we had a client that was a TAMP, and they were struggling with this, but we see this in a lot of firms where the way that they manage cash, is they will pop a variance check every day, and they'll have a cash variance analysis. And so they'll be able to see, okay, this account has outlier high cash that has come in. Therefore, I need to go into the account to see what's going on. Versus what we do is we will intake all of the transactions that have occurred on all accounts, and then we are matching those transactions that have occurred on the accounts to the characteristics of the account. So what is the model? Is it, is it an unmanaged account? Is it like a direct trade only? What's going on in the account? Can it be ignored, or does it need to be dealt with? And then we have criteria that may be, do we auto invest this deposit that comes in, or does the client not? Does the client want to be checked with before a deposit comes in? And so if we intake the transaction and then we match it to these various criterias, then we have the action item that we need to do. So if a deposit comes in and it's in a managed account and it's not to be invested automatically, well, then what's the step that you need to take? You need to go create, and this is what a lot of advisors don't do, you need to go create a cash exception for it. If you don't create a cash exception for it in the moment, on the spot, then 3 weeks down the line, when you want to do that variance check, you'll realize that you have this deposit that you didn't put a cash hold on, right? And then you're going to have a trade error. And the vast majority of trade errors for advisors occur because they have too much cash in accounts. So cash management is really, really, really critical. So another thing may be when you raise cash for a distribution, okay, you set a cash exception. This is all trading systems. You set a cash exception on the account, or a cash hold, or a cash restriction, whatever it may be. So from there, as soon as the money leaves the account, you have to go in and close that cash exception out, right? So a lot of advisors will set an expiration on it, but that expiration might have hit, but the client didn't take the money out, or it got delayed, or rejected and came back, or something like that. And then all of a sudden, the cash exception is closed automatically, yet there's still an abundance of cash in the account. So all of those ways are totally negated when you monitor it in a transaction format. And then immediately when you see the transaction, you tie it to the cash exception to see if it should open or close or what it should do. And another thing to that too, this was the main problem that this large firm was facing, is they were picking up all of their deposits that they needed to invest on a day by looking at a cash outlier report. Oh, assuming if a deposit comes in, it's a cash outlier and I need to invest it. Well, if your cash outlier parameters are 3% or 4% of the account or higher, and that's my cash threshold, if your deposit doesn't exceed that amount and doesn't trigger the variance, then you're not investing deposits. And so they were having this major issue where, okay, clients are putting in $200-300 a month, and it's not actually triggering variance. So they're missing all of these deposits and not getting them invested. Well, when we discussed, and eventually when they came to us, it was no, we pull your transactions. I mean, it might be a 400 line page for the day, but that's how we do it. I would highly encourage, as you are running your process and system, to be monitoring and dealing with transactions immediately and daily, and to do that rather than relying on variance checks. Variance checks just don't tell the story. If new securities come in, a lot of firms will try to identify those new securities through variance checks. That doesn't do it. You have to see the transaction. Otherwise, you're chasing your tail with variance checks all the time. So that kind of immediately getting on things is what allows you to pivot in the big picture, and being transaction based allows you to be really, really tight on cash. In other words, we want all cash to be accounted for at all times through transactions. And then the only reason that something would be high or excess would be that dividends have actually hit and you should be trading them, or that's how you locate that a client did a trade possibly, which they like to do and not tell us about it, right? Clients like to go in there and tinker. And that's another thing in our world. We monitor all of the trades too and match them to what we did. So if a trade happened outside of what we do, we pick it up next day because of it. So we could see when the client has traded the account. Client trades the account and then you trade it later. It's a trade error, and we're just trying to avoid those. All of these things are things that they may not be problems at 20 million, 30 million. They're problems at 600 million. I mean, they're problems when you're managing 600 households. These little, needles in haystack things. I think another really critical thing that advisors can do when managing portfolios is to manage in a class structure. And not all softwares are able to do this. This is the primary way that we trade for advisors is this class system. So most advisors will have an IPS, and the IPS will spell out normally stock to bond ratios. Hey, you're going to be at a 60-40 or a 50-50 or a 70-30. So there's a risk-based profile that the advisor agrees with the client. Then from there, you kind of have your subclass structure, right? So within equity, you'll have US, you'll have small, emerging, and whatnot. Then from there, you have the security level. Now, a lot of these, a lot of the, like an iRebal or, some of these other systems, they're really not very good at trading towards this class structure. They start at a security level. And so the way we do it is we trade at class. In other words, every security becomes a replacement or a substitute for itself at a class level. And what does that simplify? That simplifies variance. That simplifies, when you're investing cash, you're able to make sure that, look, I own VTI over here and it's way underweighted, but I also own Apple over here as well. And if I'm advisor, I'm looking at this with a client, I know it needs to buy bonds. Like I know bonds is what needs to be bought, but my bond positions from a security level are very on target. At a class level, at a security level, VTI is very underweighted. So these systems recommend VTI, but then that drives you out of investment policy. It drives you out of your risk profile. So class management, trading to a class level is very, very optimal, especially as you grow. It just becomes a simpler way of doing things and more accurate. And that's what allows you to deal with when we might get an account in and it's got 25 securities and they're all stocks. And, the advisor's like, what are we doing here? How do we manage this? And we say, well, in your US large cap, you're perfectly fine. So if we're trading at a class level, you look great. And we don't have to now sell these positions. We're just trading at the class. And so I would, outside of transaction based for cash reviews, dealing with issues immediately, I think everybody, for the most part, should be, unless you have a real tactical type model, which most of our clients are really planning centric. Unless, dealing with capital gains constraints and the likes, trading at a class to subclass and then security level becomes a very important thing. Sensible and achievable regular scans, I think, is also a big one here too. You have to think that, firms that, let's say, do a daily high cash check, right? Every day I'm going to go in there and check for high cash. Well, if I've tightened up my transactions to where I know what high or low cash is based on transactions, then I account for them. I don't actually have high cash unless some external event has caused high cash to occur, which should only be dividends and capital gains distributions. So if that's the case, then what sense is it for me to run a high cash check every day? Well, I don't need to. I need to run it twice a month or a month, once a month, because dividends and capital gains only come in, once or twice a month. And really they stack up at the end of the year, but even throughout the year. So if I'm tight on my cash, then we don't like doing scans for the sake of scans, right? And so a high cash sweep every day, because we're running variance, is not going to be a very efficient way for you to operate. So this is, achieving a high operational standard, accounting for everything, but doing it in a way that is sensible, I guess. Other things like variance checks. Well, I mean, sometimes some people run their firms where they're doing a variance check every day. The primary reason that they're doing it is not to make trades every day, it's to find outlier positions. It just isn't sensible to trade every single day or to look for it. You'll get whipsawed, issues may occur. So, especially when you shift to a class subclass, you can tone down the amount of times that you have to do variance analysis. You may just do it once a month because is the market really moving that much to drive stocks and bonds out of whack? Not really. I mean, it doesn't happen very often. So, I mean, this is just a point for you that you don't have to uh, think that you have to spend a lot of time doing something when everything else that you've built has already helped finding outliers in other situations. Uh, Tax loss harvesting scans is also very similar. Um, we've, and this is a hot topic every few years because other years, everything's grown and there is no losses to harvest. So if you institute a tax loss harvest scan every single day, for the most part, it's not going to hit any triggers, right? So you can back those scans off, or you can set. I think for the most part, advisors that we work with, uh, you can recognize in the environment, hey, it's probably time just to pop a check off and see if anything is breached. Well, if you're tight, you can pivot and run that scan and then react to it pretty quick. I'll say another thing about it too is in tax loss harvest scans, you really want to get focused on the clients that it matters to. You don't want to just be turning over portfolios for the sake of it. So you find the clients that capital losses will actually help if they're selling a business coming up, if they've just realized the gain elsewhere, if they've got positions that they're peeling off, that you need to then find harvest opportunities so that they could continue to exit legacy positions. I mean, again, I think if you're set up in a big way to do your model changes and whatnot, if you are set up on the daily task to be able to support those big trades and big changes quickly, you really don't find that these scans really pick up much because you're so clean elsewhere that you just don't need them. And that also can help save you some efficiencies as you flow through your year. Um, I'll say another thing in reconciliation, just for the sake of efficiency. But again, this is all as you grow. Um, there's a lot more needles and haystacks to find, and there's a lot more complications that can be found. The best way to run reconciliation for accounts isn't to reconcile the previous day trades. If you execute trades and then you go in the next day to see that the trades that you placed executed, you are not painting the picture properly. We recreate every single trade over again. We have all of the instructions, all the tickets, all of the various account characteristics that need to go in place. We are replicating the trade a second day in a row and producing a result of nothing. So a null result. Because you not only want to ensure that you executed the trade, but that you did the trade properly. And so what that would require in your management of your team is that you have all of that stuff written down and you're asking your trading group to redo the trade to make sure that it was done correctly. So we find often that, I mean, the trades that we wanted to execute or that we executed, but maybe the cash hold was not on proper or something occurred, or maybe a capital gains budget is breached when it shouldn't have been. And so recreating those trades is a very important measure for you as you grow. And we save everything in a PDF or Excel format so that I can go back to 2019, Kate, and pull that firm, and you could tell me a particular day to pull the trade, what we did and why we did it, and we can still do it because we keep all of that separated out in archives. The last one here that really becomes something as you grow is execution of block trades and dealing with the trade desk for the high touch trades, which Schwab now wants to charge $5 for, and kind of pivots the way that things may or may not need to be done there. So when you're a larger firm, and you've taken on a lot of growth, you'll have instances in particular security types that you will push volume on markets. So you may be trading at above 5% of average daily trade volume. Like, say you want to get rid of an emerging market position and get another one in portfolios. Well, that's going to require what used to be calling the block desk, having them work the order, you know, and having them know it's about to come through fix. They get it. You stopped them. They're organizing it or sending it through as a not held order. Nowadays, especially at Schwab, how that's going to be shifting is you're going to be needing to manage limits as time goes, so you don't trigger that $5 trade for everyone. So, all of these are things that you have to learn and get used to when you're small, so that when you grow large, you're already accustomed to a lot of these things. Do the daily tasks so that you can pivot big on big trades very quickly across the board. Switch to transaction-based cash management. I mean, it's so critical, and that's what really helps. And security management. I mean, the transaction basis was what allows you to know securities have come in that aren't things that you did, and they happen. Manage at a class, subclass security structure. Start top down. That's how you best stay within investment policy and best are able to pivot and trade complex things in a simple way. Establish when you're going through what you want to do. Think about the scans and establish them in a sensible way, so you're not overwhelmed by scans and scan outputs that aren't finding things. Work with the block desk. Learn how that goes in the execution levels that takes. And when you run reconciliation, recreate the trade. I mean, you're going to have this, especially as more clients come on, where somebody's going to ask you what you did 6 months ago or why you did something, and you need to have that paper trail. I mean, it may not be necessarily for the SEC who runs a different audit, but it's for a client who says, why did this occur? Well, I've got the ticket that matches. Here's the trade that was created. Here's the process that it went through. And they go, okay, cool. All is well. Thank you very much. All really important stuff. You start the task now. As you get bigger, it is very, very easy. So, I mean, this is all stuff that we do. I mean, we've learned over the years. It's been 8 years of doing this. Our trading team, we've got, I think it was 150 years of trading experience on our team. Most of our people, it's hard to find good traders, but we've got a really, really solid team that works with us. We've worked with a lot of firms. All of the ideas and concepts that I bring that help growth or help you absorb growth are the things that we work with and deal with and help firms achieve on a daily basis. A very personal way. Like if you come work with us, one of the first things out of the gate is we're helping you formalize. We're understanding what it is that you want to do and helping you get that stuff dialed into a process so that we have a system that we can run for you. So I think that's kind of it for me.
This is awesome. What a great framework and actionable takeaways. I appreciate your generosity in sharing this with everybody. A couple of questions is when firms come to you feeling overwhelmed, what's usually driving that? Is it volume, inefficiency, lack of clarity, all the things you've outlined here? What's the normal, most common pain point you hear from your advisors?
Yeah, I think they're starting to realize that volume is increasing and things might be slipping a bit out of their control, and they don't really know from a trading and portfolio admin perspective how to gain control over it. They're finding themselves with more tasks, with more things, and it just isn't really something that you think about. They start seeing where their informality previously is going to be an issue. Like, gosh, so a lot of times a trade error might spark this where, a client I had to file a trade error because I had this cash sitting on the sideline for 6 months because we had a meeting about it and then I forgot about it being there and didn't have, something to tell me it was there. So I think you're running fast, you're building clients, you're at a level where you can know the things just in your mind because you've sat with the people and you can see it. But then firms hit that break point where they start to know that if I don't formalize this thing, it's going to get out of control. I think that's where they get overwhelmed. And then they don't know maybe what the formalization actually is. Like, what are the things, how do I actually build this structure and system so that I can support the growth that's going to come on?
That's great. And if somebody that's sitting in listening today is, like, yeah, inspired, I'm ready to get going on this, and they maybe lack clarity around the vision, how would you coach them into helping them find that level of clarity and deciding like who they want to be so they can start to formalize some of this stuff?
Yeah, that's a good question. I mean, this is a lot of the conversations that we take on early is I guess from your perspective, if you're going to establish it all on your own or on your own and start establishing those things, versus working with us. And when we work with somebody, we have guidelines and documents that basically have a lot of different factors and points that we've come up with. It's a trade guidelines document that, I mean, it's almost whenever we get to that point, it's like a 2 hour call of just, okay, what do you want your variance to be here? In this situation, how do we handle it? What do you want to do? And so it's very detailed in that way. We've seen enough to know what these things are. I think it could be tough without that consultation. But I would think things like, do I want to, I think advisors, when they work through, probably know that something isn't ideal. Like it's probably not ideal that I'm, investing deposits every 2 weeks. That's probably not the most ideal. I think there's little intuitive things like that that they might. I use that as an example over and over because it's a low hanging fruit. But I think there's intuitively things that they know this isn't the way that like I really could be doing it if we were really really gung ho, or not really gung ho, but really structured and planned out properly. So um, that's a big part of the onboarding is understanding that with us. And we'll ask advisors for models, or a lot of times we'll just say, dump your database to us. Just give us everything you got. I don't want you to format everything to fit us. We're going to explore how the setup is of everything. Okay, all of this stuff is set up this way. This is what you have. Is it intentional that you have, models built this way? No, it's not. It's just the way that we knew to work the system. And so, um, we are really good at dissecting what it is that you're currently doing. And then we have the conversations of, is what you were doing, was it by design or was this to try to make yourself efficient?
I get it. That's it. That's helpful takeaways. And so, you guys, we've got a little bit of time left. If anybody has any questions, you're welcome to pop them in the chat or the Q&A. This is really helpful, Brett. Is there, what's the best way for people to get a hold of you if they've got questions or want to schedule some time to chat?
Yeah, you can visit the website, advisorlogistics.com. There's a contact page there. It'll send some of our business development folks can talk to you and out of the gate. If you want to get directly to me, Kate can send out my email afterwards. We can schedule. That's also fine too.
Awesome.
The most low hanging fruit, our website, advisorlogistics.com. Kate, I'm curious in some of the things that we talked about, how it works on your side. I mean, because you're doing the same, but in a database management side. I'm curious what overlaps you might have seen there.
Yeah, I mean there's a lot. A lot of exactly. A lot of what you're talking about on this slide is what we help firms establish from an operations standpoint, right? Like
Right.
having this level of clarity, understanding what you want the client experience to feel like. How does what you do work into that? How do we systematize it? How do we make sure there's very clear role delineation around who's doing what to reduce redundancy and reduce duplicative work and to keep things clean and
Yeah.
consistent, and so some of the things you're talking about, like tagging contacts with specific models, or and making sure we've got IPSs on file, just monitoring and organizing and structuring all of that So there's a very clear and consistent way of managing the various components of these relationships. You're talking about documentation, huge piece of what we do, making sure we have a process in place for documenting client communication, for documenting trade execution, for documenting anything that might come up down the future where you're like, ah, shoot, I don't remember what that was about, you know?
Yeah.
There's a lot of overlap between what you and I do, which is, I think, why we've had a nice relationship
Yeah.
for so many years. Is I need you, and your team needs us to be effective and just reduce unnecessary back and forth communication.
Yeah. Yeah. I think it's interesting. I mean, whenever we get started with somebody, there's a bit of and it's probably similar with you. There's a bit of a curve of
Sure.
learning because everything becomes so systematized and formalized. But once people working with us, and then we hit this, I guess, the flow state, right? And it might take 6 months, might take a year, but eventually we hit that flow state, and advisors pop in, give us their tickets, interact. We have an online dashboard that our advisors use that has a lot of these things in it
Sure.
that they can react to. And I love when I see it just hits the flow state. It's just there's not emails going all back and forth, and everything's real tight, and the advisor's just in the process and in flow, and it's always a lot of fun to watch when it gets there.
I totally agree. And it's there's no like get rich quick scheme, you know, like you have to put some elbow grease into it. You have to think about this stuff. You have to have clarity in the vision. You have to know how you want to execute. You have to be able to like verbalize it and articulate it. Otherwise, we can't build it. But I think one of the values of working with a team like yours or mine is having that like collaborative conversation. We've had the privilege of like working on the inside of a lot of very, elite firms and be able to give you some feedback on what works well, what doesn't work so well, and like question kind of why do you operate this way? And sometimes it's, well, we've just always done it that way, and be able to kind
Yeah.
of challenge those beliefs and set up really simple, effective systems that get you to that flow state, which I think is the ultimate goal for all of us.
Hmm.
Yeah, this is great. Really awesome conversation, Brett. I'm super grateful that you donated some of your time to share it with our community. The helpful resources and frameworks you put together here are very thought-provoking and actionable. I hope everybody got a lot of value from this conversation. We will shoot a follow-up out this week with everything that you guys covered, and your contact information and anything. Yeah, if anybody has any questions, y'all are welcome to reach out to myself or to Brett. But I'm grateful for the information that you provided here. It's helpful and eye-opening.
I enjoyed it. It was great to see you again, and thank you everybody for joining.
Absolutely. Have a good afternoon, guys. Take care.
All right, bye.
See ya.